My name is Tyler. Welcome back to the channel. We need to go over a lot of very important things in this video. We need to take a look at, is this bullish rally going to continue? Are we going to melt down to the downside? There's one indicator that you guys have to be made aware about. You guys could follow this on your own. This is not something specifically you have to get in an update video every day. So I want to go over that with you guys, give you guys that bit of information. Even though we're only up 0.5%, definitely looking very bullish. We're going to go over the Ortex data, the stock tracker data, the overnight reverse repurchase agreement market, because this is almost at all-time highs and we all know what this means. But if you don't, I want to go over that with you guys, as well as some reasonings why AMC is going up, and then finally some insider trading that happened with Fed Jerome Powell. Not directly, but some people are calling this insider trading. So let's not waste any time. Let's get into this video. Hit that like button for me. Consider subscribing to the channel. And with that, let's get straight into it. So we are up, like I said, about 0.5%. And not to beat around the bush, let's just dive straight into what this bullish indicator is. And this is the 50-day moving average. Pretty straightforward. If you take a look at this on the daily candlestick chart, you guys can see this is the whole rally we have had when we did hit the high of $44.44, and then we did come down, but we've stayed above this 50-day moving average ever since we did cross this and really get a solid break. This was back here October 4th. And this 50-day moving average is currently at $40.70 per share. So as long as we can stay above this, we're looking at this continued rally, and this will serve as a support level. If we fall under this, this is going to turn into a resistance level. So long story short, we stay above this, very good. We drop under this, very bad. So that's what you guys need to know. Remember, daily candlestick chart, 50-day moving average. As far as, potential upside, what is actually going on today, what is moving the stock, I think it's a little bit of a gamma squeeze, some hedging that is going on from the market makers. As we do know, we have a lot of contracts that are just out of the money, and we're on, obviously, October 22nd. We were on January 1st right there of 2022. You guys can see 11,000, 16,000, 13,000, 20,000, 15,000. That's up to the $46 strike, and then it's still elevated all the way to the $50 strike. Now today is Thursday, tomorrow is Friday. These contracts expire on Friday, so I don't know how many of these will actually go in the money, but I do expect a decently sized move on Friday. My end of the week price prediction is still at about $45, but take that with a big grain of salt. That's only my opinion, not meant for you guys to base any trades around. I am not, making any trades based off my $45 price target. But like I said, stay above the 50-day moving average, definitely on the table. If we drop under that by the end of the day, it's not on the table, and I would pretty much forget about that. Now, let's talk about just briefly 236,000 calls that are out of the money expiring tomorrow, 26,000 that would expire in the money. Watch for obviously out the money contracts to go into the money. That'll give you a good sign of what is going on. A lot of this, like I said, concentrated close to going into the money. November 19th is going to be the next most important day to be watching for, and then January 1st, 2022. Now, I don't want to focus on this too much because obviously we just went over it. Let's get into the Ortex data and then talk about some of the other things that are going on today. So 16.64% short interest of free float, 85.08 million shares that are sold short. Very large amounts right here. I would, not discredit this whatsoever, even though, and obviously take this with a huge grain of salt as well, the numbers have indicated they have went down. I don't think that is the case. I think these hedge funds are using options to make it look like they have covered. I think that's very well known at this moment. But still, even if these numbers are 100% accurate, these are high numbers. We're not seeing a lot of activity from the return shares or the borrowed shares today, and the return shares is simply coming from the free flow on loan being returned back to its owner without actually being sold short into the market. Now, This return share number could be shares that are actually being covered, but we're not seeing shorts covering. I don't even think that's a question. I think a lot of this is just trading algorithms. Even hedge funds that we can see are buying into the stock, as well as, you know, gamma squeeze activity. So that's what you guys need to know from that. Share utilization is at 86.21%. Free flow on loan 20.88%. About a 5% difference from the short interest. The estimated short interest and the free flow on loan, meaning I think the short interest could likely go up more, or we will see more return shares going back, and that will be right here from the free flow on loan. But there's definitely ammo to push this thing down basically at any time they want to. The short sellers want to, but there's really no short thesis on AMC. So at this point, you'd just be trying to crush the apes, and we have shown time and time again, whatever they do will not crush the apes. It's that simple. So I don't expect a lot of shorting to continue right now in the present moment. Okay, let's talk about the overnight reverse repurchase agreements. And as you guys do know, this either means there's too much cash in the marketplace or there is a need for safe collateral. And I do think, since, you know, all these hedge funds are so over leveraged. I mean, the margin debt is almost at $1 trillion. They need safe collateral, especially after all of the rules that we have got over the past, you know, couple of months. A lot of those rules had to do with safe collateral. What is safe collateral? What is not safe collateral? Treasury bonds, this is seen as the safest collateral that you could possibly have. It's the US government, right? Especially since this whole default situation is kicked down the road a little bit further, right, till about December. This is very safe collateral. And what the issue was with Archegos, they were collateralizing collateral. So they were taking, you know, collateral from one person, taking it to somebody else, using that same collateral to get another loan, and they kept doing that. So there's a lot of pressure to have safe collateral. That's why you're seeing the reverse repurchase agreement still inching higher at about $1.5 trillion. Our all-time high is $1.6 trillion. So we're getting back up there on a continuous uptrend. As well as that, a bit of the reason why AMC, I believe, is going up today is due to not necessarily this article, but some of the good news we got the other day. This says AMC Mole's creating its own cryptocurrency, getting hyperactive in the space. And this has not been getting any attention from anybody. I don't know why. It's kind of frustrating. I think apes need to know this, but AMC said they're going to be announcing in the next couple of weeks a totally new business line not related to the movie theater industry as you would typically think. And it's not been getting any attention, but I think mix that with this cryptocurrency stuff, it's likely to be something around cryptos or gambling or something along those lines. I would be surprised if it didn't include cryptos, but I mean, anything can happen. AMC can be pretty unpredictable sometimes, but what is having a lot of people excited is right here. There are a lot of reasons why AMC could be a successful issuer of cryptocurrency as well as a redeemer of cryptocurrency. Adam Aaron also did talk about basically holding it as an investment as well. So I think that would add a higher multiple to the stock, give the stock a higher valuation, which would ultimately give us a higher valuation per share, lead us closer to the MOAS, so on and so forth. As well as that, the last thing we're going to cover in this video is Fed Jerome Powell sold up to $5 million in stock in 2020 before the market tanked, and this was on October 1st. Now, a lot of articles that, you know, and Fox Business is kind of skewed towards one side. Obviously, a lot of news outlets are these days, but a lot of them are saying this was not directly insider trading, but the markets did happen to sell off 6% over the course of October, obviously after he had sold in between 1 and 5 million of a Vanguard total stock market index fund. Now, I don't necessarily think this is insider trading. I don't think, you know, the Fed knew what investors were going to do. There wasn't any major announcement that came out in October, at least that I can remember, and I actively trade the markets every single day. Nothing significant that should have caused this. I believe inflation, you know, did start to tick up, but you can only estimate what's going to happen so much. And 1 million to 5 million, that's a small amount of Powell's actual, you know, net worth. So it's not like he dumped everything before this happened. So that is going to wrap up this video. If you guys got value out of it, hit that like button for me. Consider subscribing to the channel. If you guys want to support the channel as well, link for public, link for Webull, and the link for the buy and sell alerts. You guys will be notified every time I make a trade in real time with stock, options, and or crypto, whether it's a day trade, swing trade, or longer term investment. So definitely take advantage of that. It is very inexpensive, and we have some open trades right now that could be some home run winners. So that is all for this video. I will see you guys in the next one.